Welcome into the reaction channel, folks. Hope everybody's off to a tremendous week. We have a massive next 4 days in front of us, folks, and we got to speak about it, okay? SoFi is reporting earnings tomorrow morning along with PayPal. We're going to speak about what I'm expecting to happen with those stocks, what I'm expecting to happen with their earnings. Do I think they're going to miss earnings, beat earnings, those sorts of things? We obviously have a bunch of other big earnings tomorrow as well, Visa, Starbucks, some of those companies. Wednesday, Meta's reporting. In this video here, I'm going to let you know what I think is going to happen with Meta stock. Do I think they're going to miss earnings, beat earnings, things like that? Amazon's reporting Thursday after the bell. In this video, we're going to talk about Amazon. Do I expect Amazon to beat or miss? Am I expecting their stock price to go up or not? And then Fubo as well. And once again, there's a bunch of other big earnings that we're not even going to touch on in this video here today, like Microsoft, Apple, right? Companies like that. So an absolutely loaded week. I hope you guys are ready to rock and roll this week. Definitely make sure you're following on X because I'm always posting, a lot of stuff around earnings time like this. So we'll look at all those companies' numbers in just a moment here. After we get done going through that, then we're going to react to a couple videos on a couple Wall Streeters' opinions on what's going to happen this week with these big tech earnings, and I want to share my opinion perspectives based upon that, okay? Appreciate y'all joining me as always. Thank you so much for being here. Welcome in, folks. Only thing I need from you, one thing only, is for you to smash that like button on this video and make sure to subscribe to the channel. We are 91,000 plus subscribers strong now on the reaction channel. So I appreciate each and every one of you for being here as always. Additionally, if you're looking to take your investing game up to a much higher level than where you're at, you can apply to join a private stock group, private wealth group, get access to 1000xstocks.com. That will be pinned comment down there. Click on that, fill out a form. We'll see if we can get you access to that a little later on this week. Access to all my best course curriculums, Discord chat, all that good stuff, okay? Alrighty, so SoFi, right off the bat here, okay? If you want to know, if SoFi is going to beat earnings or miss earnings, it's always very important to start with what happened previous quarter. What has happened in the past for a company like this, right? And so if we look at the latest quarterly numbers, SoFi did beat analyst expectations. They beat on EPS across the board, right? Additionally, they beat on revenue, which is a very, very good sign. Now, additionally, you can see here that the company has a history of beating earnings quarter in, quarter out for the last 5 quarters. They've double beat 5 straight quarters now at this point in time. So right off the bat, if you're wondering, is this company like SoFi is going to beat? Odds are definitely stacked in our favor that SoFi will beat their earnings estimates. Now, where are earnings estimates at here for the quarter? Well, they're actually fairly low. 3 cents is all that's expected for SoFi to report this quarter. So very, very low expectations. So I'm feeling pretty confident about an earnings per share beat. Additionally, they're expecting revenue growth of about 27%. I think that number is doable as well. I feel more confident in the earnings per share beat than the revenue beat, but honestly, both are doable. Now, in terms of stock, so in terms of SoFi stock, it has started to come back here recently, but I got to be honest, it's been a shaky past few months. If you go back to January, the stock was pushing $17, $18, right? And then obviously the whole market drama happened, and it got all the way down to the $9 range. Now it's, up to about $13 or so. So when it comes to SoFi, additionally, keep this in mind, folks, very important. The company is a company that you can count on growing and growing and growing. It's not like all of a sudden, they're growing, very high growth rates and they just stop growing. Like, it's not that sort of company, right? Additionally, they're still at the very early stage of profitability. Do remember this. This is where the company's at on a trailing 12-month when it comes to earnings per share. It was Red Dead Redemption for a long time. So they just flipped over to profitability. That should continue to increase in future years, right? So SoFi is looking good here. I'm feeling pretty confident. If the stock goes down, it is a buy, especially if those earnings are good. PayPal. This one matters even more to me. PayPal is a bigger investment for me than SoFi is, right? So when it comes to PayPal, once again, you got to start last quarter. They did beat on earnings per share across the board last quarter. They also beat on revenue last quarter. Now, Alex Chriss has been running this company now for about a year, and we've seen, pretty promising results the last 3 quarters. They had 3 straight earnings per share beats. They did have 1 revenue miss out of the last 3 quarters and 2 revenue beats. So I would say Alex Chriss doesn't have it quite as dialed in as Anthony Noto, but keep in mind, Anthony Noto's been leading SoFi for a long, long time now, whereas Alex Chriss is still kind of new kid on the block. Now, they have set expectations very low for PayPal here, which whenever a company sets expectations is pretty low, it's a good probability you can come in and beat those expectations. $1.16 earnings per share expected, which is about 7.5% growth. On a year-over-year basis, I think that number is very beatable. Additionally, next quarter's number, only expecting 1.6% growth. Very beatable number. So I really like PayPal as far as beating this past quarter and beating next quarter as well. Very low expectations. Now, additionally, when it comes to revenue, only 1.8% growth expected in this quarter from analysts and 2.5%. Also very beatable number. So I'm looking at PayPal here, folks, and I'm feeling very good about PayPal going into these earnings. We'll see what happens, but this is another one. If it goes down at all for any reason and they come in with great numbers, like it's a buy. But my hunch is that the stock will probably move up and we'll see it back over $70. But whatever way it goes, even if it goes to 70, it's still a buy. If it goes down to 60, it's a buy. The valuation just makes a lot of sense in regards to PayPal. I mean, too much sense, honestly. You're talking about a company that's trading at a forward P probably of 10 right now, somewhere in there roughly, with, numbers that just continually grow in regards to PayPal, right? And they're not expected to stop growing anytime soon. They're expected to just kind of have this slow growth right now and then get back to very nice growth as the year ticks on and we go into future years in regards to PayPal. But take a look at the P ratio in regards to, or the forward P ratio in regards to PayPal here, and you'll get to see what I'm talking about. Forward P, and this is based upon analyst expectations of 12. High probability they'll come in and beat analyst expectations throughout the year. And so, man, it's just very attractive stock. Very attractive stock. Meta is next up here. When it comes to Meta, they crushed their earnings per share last quarter. They also crushed their revenue as well. They beat by almost $1.4 billion, but $1 billion on revenue. Now, additionally, check this out. Okay, let's count them up. 1, 2, 3, 4, 5, 6, 7, 8. 8 straight quarters of double beats. 8 straight quarters of double beats analyst expectations, earnings per share, and revenue. Incredible, right? They had a tough 2022. We all know about that, right? But the moral of the story is this company's been on fire, okay? Now, if we go to analyst expectations here for what analysts are expecting, 521 earnings per share, only 10%, and then look at next quarter. Analysts are only at 8.7%, and then the next quarter's negative. Dude, we've got low expectations for Meta. And you listen to Google's earnings were pretty respectable, right? And so, Google ad business looks very strong. Whenever Google's strong, Meta's even stronger. And so this is crazy, man. You want to talk about a stock that has very low expectations for this next year? It's Meta. It's Meta. Additionally, we look at revenue growth. Analysts are at about 13% for this quarter they're about to report, then down to 12%, and then down to 11%. So I like Meta not only for, this quarter, I like Meta for the remainder of the year. And I think this is going to be a hard stock for them to keep down. I mean, would I be surprised if this one's, explodes up to 600 to 650 after earnings? Not at all. And if it goes down for any reason on these earnings, for the people that don't have positions in Meta and have wanted to build a position, that will be your golden opportunity. But my hunch is that they'll come in, beat analyst expectations. They'll probably have a pretty good guide and commentary, and then I think it's going to be hard to get Meta stock down anymore. But if it is down, that's just a huge gift for folks out there, right? And when it comes to Meta, once again, company just knocks out of the ballpark in regards to their growth, expected to continue to. Look at the net margins of this company have exploded upward. They've gotten to such an extent that it's like, can they even grow their net margins anymore? It's ridiculous, right? Gross margins continue to look at the 80% plus range. Earnings per share is expected to continue to increase, but I don't think analysts are bullish enough on Meta. So Meta feeling very confident. Whatever happens there is whatever happens, but I'm feeling very confident. Amazon. So when it comes to Amazon here, they beat easily last quarter earnings per share, 38 cents. They also beat revenue by almost, we can call it over $500 million, but $1 billion. Additionally, when you look at Amazon, right, the last 2 quarters they double beat. Now, the June 2024 quarter, they did miss revenue by about $780 million. So if we count it up here, we can count 1, 2, 3, 4, 5, 6, 7, 8. There's been 8 quarters. 7 of the last 8 quarters, they double beat, right? And there's only one quarter that they missed any sort of number, and it was that one revenue. So Amazon's one company that you could almost count on beating every single quarter, right? Now, additionally, look at the earnings per share, $1.36 expected here, $1.40 next quarter, right? Both those are very beatable numbers. Revenue-wise, 8%, 8%. Beatable numbers as well. Like Amazon, usually a company I expect to grow 10% to like 15%. So, I'm expecting more in that 10 to 12% revenue growth range, not only for this quarter they're about to report, but the next quarter as well. So Amazon, I think, looks very, very good here. Now, Amazon always can count on them growing and growing and growing and growing. It's just the only question with Amazon is how fast are they going to grow? Is it like an 8% clip like analysts have, 10%, 12%, 15%? Additionally, look at where the net margins are trending. And keep in mind, we're still very early days in regards to net margins of just over 10% now. Like long term, in my opinion, Amazon's net margins are going to 15 to 20% as they get their e-commerce business more profitable and as they continue to build their advertising business, and you have the Amazon Web Services there. So Amazon's got like 10 years of net margin growth ahead. One quarter or another quarter could go down, but at the end of the day, like it's very clear to me where this trend's headed, right? Earnings per share, same exact thing in regards to Amazon. And keep this in mind in regards to Amazon. This is very important. I show you this, okay? Take a look at this. The forward P on Amazon is under 30 right now. For Amazon, that almost never happens. The fact that the forward P is under 30 is like steal deal. Usually Amazon's forward P is 50, 70, 100, sometimes several hundred. Forward P under 30 for Amazon, steal deal, because this company has, you can see how their three main businesses, they got a lot of different businesses, but you see how it's so easy to see how their three main businesses just keep growing. E-commerce is going to continue to get bigger and bigger. Advertising business is going to continue to get bigger and bigger. AWS is just going to continue to get bigger and bigger. So it's easy to see how a company like Amazon is going to continue to grow immensely over the next decade, right? So forward P under 30 for an Amazon, very attractive. So, in regards to Amazon, would I be surprised at all if the stock goes 200 plus after earnings? Not at all. And once again, it's one of those that if there's any sort of dip after the earnings, it's a huge buying opportunity for anybody that's got a long-term investor mindset. Like Amazon's just easy money long-term, right? Fubo. So first off, Fubo's climbing back before these earnings, is back over $3 now at this point in time, right? No, Fubo, last quarter, slight beats there, and a very slight miss in regards to revenue, right? Now keep in mind with Fubo, the numbers aren't as important as ultimately the deal with Disney going through, okay? So that deal with Disney, hopefully we can get some positive commentary around that. That in itself, if they can just have positive commentary about the Disney deal going through, that in itself, the stock will explode higher. Like, even regardless of numbers. Like, numbers are what numbers are. Everybody's just really waiting on the deal to go through, right? But, you look at this, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 9 of the last 10 quarters were double beats, earnings per share and revenue. And they only had one miss, and it was on revenue, but it was a $1.8 million miss on revenue last quarter. It's a baby miss, okay? So things are clearly trending much better in regards to Fubo. Additionally here, when we look at earnings per share, negative 3 cents expected, right? That's probably in line with what I'm expecting as well. They're only expecting 3% revenue growth for this quarter and, call it flatline-ish growth next quarter. So expectations are on the floor for Fubo. Absolutely on the floor in regards to this company, right? Because everybody's just kind of waiting on the Disney deal to go through. It even seems like management doesn't want to push the business right now. They just want to make sure the Disney deal goes through and let's make sure that happens, right? Now, in regards to Fubo here, let me pull up charts here on 1000X and show you something very important for Fubo, okay? So, for Fubo, look at the earnings per share and how ugly it was, right? They're losing money hand over fist. And then these losses just keep getting cut down to very small numbers, and they should flip over to profitability. And keep in mind, if that Disney deal goes through sooner rather than later, they're going to flip over to profitability much quicker than anybody's anticipating here. Additionally, they're cutting down that cash burn in a massive way. So we should see very minuscule cash burn in this quarter they're about to report here, if any. And so I like Fubo setup into this earnings, but also, this one sets up well for this year as long as a Disney deal goes through. If that Disney deal goes through, Fubo becomes a very less stressful stock immediately, right? So looking good as far as that goes. But obviously, huge week for earnings. It's going to be busy, man, paying attention to all these earnings and listening to conference calls and running the numbers. If you're in the private stock group, I'll be posting a massive amount of income statements this week. It's going to be busy, busy times, okay? Alrighty, let's get into some reaction videos.
Is the busiest week for earnings, headlined by mega caps like Microsoft, Amazon, Apple, and Meta also on deck. Visa, Coca-Cola, GM, and McDonald's. Let's bring in.
Hey, and also feel free in the comments section to let me know how you guys are feeling about this week. Are you feeling confident? Are there some companies reporting this week that you're extra confident in, that you think are going to be reporting really good numbers, things like that? I'd love to hear from you guys in the comments section.
Stephanie Link, Chief Investment Strategist and Portfolio Manager at Hightower Advisors, as well as a CNBC contributor. Hi, Stephanie. I know you like to hide out in the individual names and ignore the broader market, but you probably slept a little bit better this weekend after last week. I think we all did. I mean, the averages after Monday sort of made a stand and got back to where they don't look that, they're not that far from maybe hitting highs at some point in the next century.
Well, the markets have rebounded very nicely off the lows seen in the beginning of April. Joe, you've seen it. The S&P is up 8.3% from the lows. The Qs are up 10.1%. The Dow's up 5.1%. So we've had a nice rally. And I think we can continue to rally if earnings continue to be good. I mean, earnings growth, so far it's only 36% of the S&P 500 that have reported, but earnings growth is running up 17%. Revenues are running up about 4%. So that means margins are doing their job, which is what I've been thinking about all year, that I think margins are going to surprise to the upside, and that's what they're doing in the face of tariffs, in the face of all the noise that we're seeing. So I'm actually just surprised that we're getting any guidance at all. So numbers are good, guidance is okay, and I think if that continues, I think we can continue to see a nice rebound in the markets overall.
The companies we want to talk about.
Listen, here's the deal, okay? If a company is giving guidance in this time of a lot of uncertainty, right? Huge positive signal for that business. That means the management team in that business has much more clarity on the business than a lot of folks do, right? They feel confident saying, we believe we're going to do this number because our business model, blah, blah, blah. It's huge. And so I think whenever you get a lot of volatility in the market, you get a lot of uncertainty in the market, I think those are the best times to figure out who are really the top tier companies. Because the top tier companies should still be able to post very good numbers even in crazy times, right? Uncertain times. And they should be able to give you a guidance number and feel confident in that guidance number, even during crazy times, right? And so I think that's a good signal that if your company's given a guidance, they're coming through beating numbers, things like that, that you're in a real deal Holyfield company.
The big ones, the tech that's coming this way, the journal, that's one of the lead stories in the journal, that it's the worst start to a year for the Magnificent Seven since the pullback in 2022. And I had to think about that because, as I said, my mind is mush. So I guess there was a pretty big, that was not pandemic related. That was.
Listen, man. Listen, baloney. Why do they talk about 2022 like that? Pullback? A pullback in 2022? We had a fucking crash in the Nasdaq. Did people forget the Nasdaq peak to trough from where it peaked at in 2021 at the end of 2021 to where it troughed at in the fourth quarter of 2022? It fell 37%. 37% peak to trough. That's not a pullback. That's a crash. It's not even a major correction. That's a crash. Crash. It's insane. What we've had this year is a borderline crash. It's certainly a major correction. Borderline crash for the Nasdaq. The Nasdaq was down at the lows around 24%-ish, somewhere around there. So we can call that borderline crash, but certainly a major, massive correction, right? But dude, you start talking about 35% plus in an index going down in less than a year, it's a crash. And that's what we had in 2022. People already forgot about it. They think, oh, it's just a pullback. Dude, no, not for the Nasdaq. We had one of the biggest crashes we've ever seen. Like outside of the tech bubble and the great financial crisis 2008, when have you ever seen the Nasdaq fall like that? You haven't. That was insane.
That was later, and I remember probably the
Meta went under $100. Come on, man. Under 100. Tesla went down to right around $100. I think it was around $101 in January of 2023. Come on.
The lows in October of both 2022 and 2023. So that's what they're talking about. It's been rough for these stocks. You think it helps this week with what happens with earnings, or is it going to be the outlook going to be so cloudy that it's just going to increase the uncertainty?
Well, I think Alphabet was actually pretty good to start with all the Mag 7s reporting. I thought basically it was in line, but the operating profit, the operating margins were far better than expected. So I think it was better than feared, and it was a solid report, and I think that bodes well for a couple of them this week. I own Amazon. I've been adding to Meta. Meta's actually been a fairly new position for me in the past month. I took advantage of the 30% drop in the stock to buy. So I guess it all depends on your time frame in terms of how you own these things or when you own these things. But I've been very careful and selective in owning these because, yeah, they had a nice run last year and they're not cheap, but the pullbacks are giving you some opportunities for what I think are long-term. You have to have core holdings.
All right, Steph. That's not necessarily your favorite place to be, though, is it? You like maybe some other more, don't you? What else at this point?
I do. I know. I do. Well, look. What are our learnings from earnings season, right, so far? Where do you want to go to when the market does pull back? Who reported good numbers? I think the banks reported very good numbers. The big six all beat expectations on earnings. And not only was it better deposits and loan growth, capital levels, trading activity, but it was also loan loss provisions were much less than expected. And I think that bodes well, and that speaks well to a consumer that's hanging in there. And so, yeah, I mean, I like some of the banks, Morgan Stanley, Truist, even JP Morgan, which I don't own, had a very good report. I think the two themes in industrials that we've been talking about for a couple of years now, aviation is one of them, onshoring is the other. Boeing, which got upgraded today, you know it's one of my favorite stocks this year because I think it's so depressed and I think they are turning the corner. They actually reported much better numbers in terms of free cash flow.
Before we go further here, let's talk about the banks. Those make smart investments, and then let's talk about Boeing. Let me talk about Boeing first. Boeing, no, don't touch. I don't care. Stock can go from 180 to 360, 720. I don't care. No. Boeing, too much of a mess the past. Boeing was a mess before Rona even happened. That company's been a mess. You know it's bad because I love to buy a turnaround play, like a beaten down dog stock that's got a great underlying business model. It just needs a little turnaround. Dude, Boeing doesn't even interest me. That's how bad it is, because I love turnaround plays. And even myself over the past number of years, no. And I've been right 100%. Like, you look at the last 6-7 years, Boeing's been a beaten down dog stock, and I've stayed away. And it's ultimately been the right move, because every time it starts to turn around, they screw something up. Something goes wrong again. So, there's always something with Boeing. It's a dog stock that just can't get out of its own way. Banks, I don't dislike the banks, but I also don't like the banks. Not at this stage of the cycle, especially with recession fears, all this. What if that does happen? The banks are going to get hit hard, right? And I just feel like if I'm going to take that level of risk, there's way bigger upside stocks. Like, if we don't get the recession, stocks like Meta and Amazon, those sorts of stocks are going to do just much better than the banks, in my opinion. It's not even going to be close. So I'm getting less risk and more reward upside if you just bought like Meta or Amazon or something like that, or even Google McDougal, in my opinion. So versus buying a Wells Fargo, a JP Morgan, a Bank of America, those sorts of companies. So yeah.
A lot less than people thought, and they're going to be positive in the second half of the year. And they also, operating margins, I don't even remember the last time Boeing had a surprise on the operating margin line. It was up 290 basis points year over year. GE, they just continue to beat, raise. Actually, they guided in line even with tariffs, but ex tariffs, I mean, the numbers are going higher. And then onshoring, reshoring, we got really good results last week about data center demand and about electrification from GE Vernova, from Vertiv, even Alphabet talked about how data center is still strong. So I still like those. Eaton and Quanta Services, they report later this week, and we'll get kind of some confirmation, I think, on that theme as well. So I think there's a lot of places that you could be buying and adding to on the pullbacks. You don't have to chase, though, Joe. You just let the market come in, let the stocks come in. But where you're seeing good earnings reports, those are the ones when they pull back are the ones you want to own.
Yeah, as far as the whole perspective about let the market come in, dangerous because sometimes the market doesn't come in. So you're waiting, like, oh, the market's going to come in. At the end of the day, you see a great deal, you got to buy it. People say, oh, I'm being patient. Okay, like if it's a great company, it's a great price, there's no patience, then you're trying to play the time of the market game and hoping the market goes lower. No, when those rare instances where also the market goes lower for 6, 12, 18 months, your patience paid off. You got lucky, though. Let's be very clear. That was not skill. That was luck, Ben. Because, like, you can't assume you're going to be able to call the market going down all the time. Like, that's unrealistic. So let's say you were like, looking at Meta back in, 2022. So you're looking at Meta and you're like, I'm going to be patient on Meta. It's at 200. I'm not going to buy it. So then it goes down to 100. You're like, I'm going to be more patient. I'm going to wait. I'm going to, 65, and I'm going to start accumulating shares. And as it goes lower, I'm going to buy it. And it gets down to 88 and never goes lower, right? So you never get to start your position. Then it goes up, up, up. You're like, oh, it'll come back in. I'll let it come back to me. Never comes back. It's gone forever. Like you can't get too greedy in this game in hoping stocks go to certain downsides and things like that. And that's a trap that gets a lot of people get caught into, man. They get greedy. They get greedy in the markets that hit new all-time high, and then they get greedy in these sorts of markets when you get a lot of steal deals and people say, oh, I'm going to let it come into me. I'm going to let it go lower. Like, dude, come on.
And companies
you can't call the market. No one can.
Reporting results. Joining us right now on What to Expect is Ray Wang. He is Constellation Research founder and chairman. And hi, Ray.
Hi,
Ray, you own all 7 of the Mag 7. Are you feeling better about any of them these days?
It's
versus
gotten
the
better.
Others, I mean.
As I tell people, we're typically 3 trade deals away from a recovery. But the reason I'm so excited about this is we're basically seeing a doubling of AI intelligence every 7 months. And if we look at Moore's law for 50 years, compute doubled 2 times every 2 years, there's kind of a new law. Let's call it Ray's law. In 2 years, it's 15 times. So at a 7-month doubling rate, in 6 years, AI intelligence capacities and capabilities can be doubling 1,000x. Right. And so that's why I'm interested, because a lot of these companies have been investing in AI. And that's why I think there's, in the long run, it's a good market. But right now, it's a little bit scary because we are in a tariff situation and we are in a market reset. And that's why it's been a little bit slow.
Well, Alphabet did say that it is spending a lot. What was the number? $75 billion that they expect to spend this year. And I guess maybe that reinforces some of the ideas that the AI spending is here to stay. But we still have to hear from Meta, from Microsoft. Who am I missing?
We got Apple, and we also have Amazon.
Amazon, yeah.
Yep.
So what do you expect to hear from those biggies?
Yeah, so when we think about what's going on the Meta side, we're going to look at what's happening with the earnings in terms of ads. We're still expecting double-digit growth. It's probably going to be a 40 billion plus quarter. Expect modest gains in their metric is daily active people, family DAP. So DAP's probably going to grow about 3 to 4%. But the ad impressions look like they were good for Q1. But that's not what investors care about. Investors will be looking to see, is the forecast going to be down? What's their CapEx spending on AI? Did they manage to get rid of most of Reality Labs? And then on the Microsoft side, it's a little bit different. We're looking to see how Azure is doing. And instead of growing in the 30% numbers, you're going to see it.
Before we go further here, we can run numbers on on Meta, and you can see, so we have advanced projections on 1000X, and we also have our intermediate projections. We'll just run some intermediate projections. You can see how Meta is going to easily go 1,000 plus in the next, like, call it year or so, year or two. You run very doable numbers for Meta here. So let's say 12% top line, and that's very doable. And let's say, about 15% bottom line, which is definitely very, very doable for Meta here. Now you run that at a PE in the, we can call it, Meta should be trading 12%, that should be easily 25 to, I would say, like, 35, somewhere in there roughly, right? I mean, you're growing 12% top line, 15% bottom line, which are very doable numbers. Like 25 to 35 is very fair for you overall, right? So let's adjust these guys here as well. Put that at a 25, and then we'll go 35 here, 35 here, here. And, you can see how Meta is going to be $1,000 plus within the next year or two. Like, it's just so obvious, right? And that's with very modest numbers. Like, I know I have this under bull case. This isn't even a bull case. Like, this is a very base case I have here. A bull case for Meta would be them growing revenue at about a 15% clip, right, on the top line, and then growing earnings per share at about a 20% clip. That would be actual, like, bull case for Meta. And you can see under a bull case what happens here. We're going way over 1,000 over the next few years, and then we'll start approaching like 2,000, right? And that's at a 25 to 35 PE range, which is, once again, very fair for a company growing at those sorts of clips. So, Meta's on its way to 1,000. It's just the only question for Meta is, do they reach 1,000 in 2026 or 2027? That to me is really the only question. Does Meta hit $1,000 for the first time in 2026 or 2027?
Dropped down to 17 to 18%, as we saw with all the other large hyperscalers. The growth rates aren't in the 20s and 30%, so it's down to 17 to 18%. And of course, you're still going to see a pretty good quarter growth that people are looking at about $69 billion in terms for the quarter. And then Apple, of course, everyone's looking to see what the impact of tariffs were. Was there a spike as everybody rushed to buy iPhones before the tariffs were kicking in? Or were they able to continue to grow their services piece, which is the big part? And then, of course, did Amazon take a hit as well because of tariffs and their impact on China? Or did they manage to continue to grow the ad business as well as their cloud business? So I think everyone's looking carefully to see what those forecasts are for Q2.
Earnings have come down for a lot of sectors, not for these big tech companies. They have not had much wiggle room at all when it comes to what Wall Street's expecting. Is that okay?
Well, they're priced to perfection, and that's part of the problem. And
no,
I think that's what makes investors nervous.
They're not, in all due respect, they're just not. They're just not priced to perfection. They're just not. For instance, we go ahead and take a peek at, we'll pull up Meta, we'll pull up Google McDougal, and we'll pull up, we'll pull up Amazon, okay? Listen, these stocks are not priced to perfection when it comes to this. Meta's at a, barely over a 24 P with double-digit top-line, bottom-line growth. Come on, man. Like, that's not overpriced. That's not priced to perfection. It's not even remotely close. Google McDougal's growing top-line, bottom-line 10% plus, double digits, right? 16 forward P? Google McDougal? Come on. And then Amazon's at amongst the cheapest forward P we've ever seen in history. And so this whole notion about, like, they're priced to perfection, they're just not, man. They're just not factually. If we want to take a peek at Apple, and we can do Mr. Softy, Microsoft, and then we can do Tesla. You can see, like, where something's actually, like, richly priced, right? Like, Tesla priced to perfection, yes. Forward P 124, 2-year forward P 80, yes, okay. Tesla's priced to perfection. Microsoft 27, that's very fair. If not undervalued, considering the company's growing double digits, top line, bottom line. Apple's at 27, you can say maybe Apple's priced to perfection or a little rich at least. Okay, fair. But Microsoft, you guys should say nah. And then NVIDIA's not priced to perfection either, just to be quite frank now at this point in time, because the stock hasn't done anything for a year now. NVIDIA's in the 20s. now for forward P. That's not price to perfection. So this notion about, oh, big tech's so expensive or it's price to perfection, it's just not. It's just not, man.
If you go and look to see what other business models are out there, the Mag 7 still have digital business models. They're built on ads and search and services and goods and memberships and subscriptions. And those 6 areas are pretty strong. And some of them do all 6, like Amazon, very well. And others are, you'd say, 1 or 2 trick ponies, but they're big ponies. And that's the issue.
There must be a pony in there somewhere. Hey, Ray, did you ever sell any of your holdings in these companies, or did you add a lot more to your positions when the stocks came down a lot?
Adding selectively adding, mostly because I bet in the long run and really believe in this AI revolution. This AI revolution is here, and it's like betting early in the internet age. And if you bet early in the internet age, there were some losers, some big ones, but most of the winners outdid the losers, and it averaged out to be well. And in the Mag 7, I think a lot of these names will be around for the next decade.
Which names in particular did you add to? Did you do this equally, or do you think you've added?
For the next decade, yeah. I mean, at the end of the day, you look at them all, right? We can go through them. I mean, NVIDIA's chips are going to be needed for a long time. Now, you can say NVIDIA's, strong position might slowly get eroded over the next 5-10 years by, Huawei and AMD and companies like that. Like, you could make that argument, right? But at the end of the day, like, NVIDIA's still going to be a chip behemoth. 5 years out, 10 years out, in the 2030s, let's call it. Microsoft, of course, like Microsoft's got such a stable business model, they're going to continue to be a beast in the 2030s, right? Apple's going to continue to be a beast in the 2030s until smartphones are disrupted. Whenever that day comes and smartphones are finally disrupted, which looks like it's not in the 2020s, maybe in the 2030s or 2040s, whenever that day comes, then we can talk about Apple's in trouble, like real trouble, right? But until then, people who's got to break their iPhones and just go get another iPhone and go get another MacBook, right? Meta, it's the internet. Like, that's what people use. Like, people go on Instagram, like Facebook, WhatsApp, like this is the internet in the modern age, right? Google's going to continue to be a behemoth through YouTube, right? Also through their Google search, Gemini, like at the end of the day, those products are going to continue to become bigger, if anything, right? And Android is another massive monster that until the smartphone industry is ever disrupted, Android's going to continue to have the premier position there. And then Waymo is going to take off like a rocket ship over this next, 10 plus years. So Google's going to continue to be a beast. Tesla, I still think Tesla's looking pretty good. It's not looking as good into the 2030s as it was, we can say a few years ago when they were really, really far ahead. But I think still like Tesla's looking really good because their product still hasn't been beat, at least in the United States and Europe, in terms of that. So until that happens, like Tesla's still looking good as far as that goes, right? And then who am I forgetting here? Amazon, oh my gosh, like e-commerce is going to continue to get bigger, and that just benefits them the most of anybody, right? AWS continues to grow. Advertising as well, that pushes them well into the 2030s. So, and I think I got them all, right? I think I got them all. So you look at the whole Mag 7, every single one of those companies is extremely well positioned into the 2030s and beyond. None of those I'm like, oh man, 3 years from now, they're going to be disrupted. No one's going to want blah, blah, blah product anymore. Or something. No.
Or to some names over others.
Some names more. I would say NVIDIA more. I would say if you looked at Alphabet, especially given their ability to go from TPU to agents. And if you look at what was going on with Tesla, if you had to bet on where robotics, manufacturing, and AI were going to head in the future, they were going to be one of the players along with the energy play, which is going to be a big deal going forward. If we can get to 2 cents a kilowatt hour through solar, through other means, that's going to help our capacity to be able to compete in manufacturing and AI and as well as in cloud.
Tesla missed on its earnings last week, but the stock took off after Elon Musk made comments saying that he was going to be focusing more on the company, maybe stepping a little bit more away from his role at Doge. Is that what you wanted to hear as an investor?
As an investor, that was the one thing people wanted to know. Was he back or was he not back? Is he still interested in the car business, or is his mind on to SpaceX and something else? And I think that helped to reassure folks. Also, the Model Y launch seems to be going well.
Alrighty, folks. I appreciate you joining me as always. Thanks so much for being here. Busy times ahead. I'll try to keep you guys up to date with everything going on between this channel and the main channel, and also on X as well. If you want to follow me on X, it's linked in the description area down there, along with my Instagram. Additionally, if you're looking to apply to join a private stock group, private wealth group, take your investing game up to a much higher level than where you're at right now, get access to all my premium courses, teaching you everything I got up here, my private Discord chat, all that good stuff. Pin comment down there, click on that, fill out a form, see if we can get you access maybe next week or maybe later on this week. Much love and have a great day.